The idea about inflation that most people don't understand is it steals from them insidiously. It steals from them at every level, every purchase they make, every bill they pay, every dollar they save. Part of that's being stolen from them. Let's say silver is at 28 and you sold it 10 times more than the client has purchased. That's not a hedge. That is not a hedge. So when the Reddit group got enthused about the silver story and started buying physical, and I hope they continue, we saw some of the ETFs change their prospectuses. Well, if they were truly neutral, as they should be, there wouldn't be any problem. I mean, they're basically a stock. You're buying a stock.
This is Dunnigan Kaiser, founder of Liberty in Finance. I'm now a licensed gold and silver dealer with Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized, private service from one of the oldest and best respected companies in the business. 30 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded, insured delivery or vault storage or IRAs, excellent prices, privacy and confidentiality, pay by check, money order, ACH or wire, satisfaction guaranteed. Call me directly at 419-819-9209 or my associate at 310-562-6400 or email us at kaiser@milesfranklin.com. Welcome back to Liberty in Finance. We have a returning guest that our viewers always appreciate. This is David Morgan. He's the founder of The Morgan Report at themorganreport.com. He's also known as the Silver Guru. He joins us this Thursday, March 11th, 2021. David, thanks for coming back on Liberty in Finance.
Well, Duncan, thanks for having me back, and shout out to my sister. It's her birthday today, so back to you.
Oh, happy birthday. And we wanted to have you on because it's been a very eventful time in the silver market. A lot of eyes that have never really been looking at silver before are waking up. A lot of people who have forgotten about silver, or maybe remember how it was in the spotlight back in 2011 or 1980 even, are realizing that there's something important about that market and why they should be paying attention to it. It seems like it came to a head around the end of January, the beginning of February. There was this Reddit Wall Street silver group that did big grassroots effort to buy retail silver products and so on. And it seems like it was getting noticed, and we had like You'll tell us how many years mining supply were dumped on paper silver contracts, and that the resulting price drop. But the fascination with and the rush, the silver rush, if you want to think of it that, to purchase physical silver has not abated since that time, in my experience. So I'd like to hear what you're seeing about that and what you think it has to, what it means, what it has to teach us about what's going on in both the silver industry, the silver market, and in the public sentiment around that.
There are a lot of things come to mind. One of the first is the old P.T. Barnum, quote that doesn't matter what they're saying about you, good or bad, as long as they're talking about you. That applies to the silver market somewhat from my perspective, meaning that a lot of people are very unaware of how the monetary system works and why precious metals throughout history have been extremely important during certain times. And we're certainly facing that time now, and it's on a global basis. So almost hate to say it again, but it bears repeating because so many people are new listeners, new to your program, and all fiat fails. There's never been a paper money system that hasn't ended in tears. It's very, very disruptive to the economic system at certain points in history. The type of event I'm talking about only happens approximately, and it's not a exact cycle in time, but it's around 350 years. So this is not a once a generation, currency changes every 40 years or that kind of thing, which, you can make a case for that. The type of event I'm talking about is one that's, as I said, well into the 300, 400 year time frame. And those events are monumental. Those are events that your children's children's children are usually talking about later. Now, they're always different because of the conditions at the time that it takes place. I mean, the last big event is the Great Depression, which obviously wasn't 300 years ago, but it was substantive enough to cause a huge disruption in the physical economy. And, you know, I've got my grandmother on tape with my sister going through what she went through living through the Great Depression and how they survived it and what other people did or didn't do and all of that. So something that my parents knew a lot about. It affected my mom more than my dad. And so I think the millennials are definitely, I mean, it's all people really, but I think the younger generation are getting an education. So back to P.T. Barnum, the most important thing is to be aware and awake and under, let's say, the openness of what do we face, we collectively going forward, and how much does the monetary system play into that, and what can you do individually to prepare for that. And of course, one of the best methods, of course, has always been the precious metals, and now we have alternative currencies throughout the crypto sphere. So there's the crypto space in the in the new electronic age, you might call it, along with hard money, and then you've got a blend. You've got cryptocurrencies that are tied to different asset classes, and some of those are tied to gold, some are silver, some are tied to both precious metals. So there's a lot out there, and this is exactly what happens at the end of the Age of Empire, the end of the cycle, where it's the monumental one I just keep referring to. So I think it's very important. I want to add on one more thing, and that is, I'm old enough to know when we went off the, not really the silver standard, but when silver was taken out of the coinage, and that was 1965. And then Nixon closed the gold window August 15th, 1971. And I remember, being a bit of a rock fan in my youth, and there was a group called Montrose at the time. It's actually Sammy Hagar that ended up singing for Van Halen. And when he was Montrose, they had an album called Paper Money. And in that song, Paper Money, it talked about take away all my silver, take away all my gold, hand me a stack of paper money won't hold. And in that song, what's so funny is that, he's a rock star. And one of the lyrics is, my car cost me 15 grand. Some say I got a deal. Melted down, I got 1,000 pounds of junk, $10 worth of steel. Well, what's so funny is, that again was when I was, in my late teens, early 20s, whatever, in that range. And 15,000 would be like a huge amount of money. A new car in those days was like $2,500. So anyone that could afford a $15,000 car absolutely had to be a rock star. Now you might get a good used car for $15,000. So, this is in my lifetime. The idea about inflation that most people don't understand is it steals from them insidiously. It steals from them at every level, every purchase they make, every bill they pay, every dollar they save. Part of that's being stolen from them. And yes, prices fluctuate up and down. And yes, the cost of a flat screen TV is less than when they first came out. And I understand all that. But I'm talking on the aggregate. I'm talking about overall living standards and what you the net value that you achieve as far as how well you do financially. And it's not good. Everybody, generally speaking, is at a lower pay rate, even though they make more dollars than they were from 1972. So let me reframe that or restate it. From 1972 to present day, most Americans' incomes have not kept pace with the inflation rate.
Yeah, the part that's bewildering to people or bewitching about that is that the stated inflation rate, that the official headline numbers that we're fed are such understated values, and they keep changing the definition and moving the goalpost that it's difficult for people to keep their gut check on that corresponding with what they're being told on the evening news and that sort of thing. We're being told, oh no, inflation's very low, very low. We even have some pretty big name guests we've had on our show claiming that, well, no, the way Federal Reserve measures inflation is very low. And we have other guests on, John Williams from shadowstats.com or Alistair McLeod talking about the Chapwood Index that measures what people actually buy, that says, no, we're clicking along at a rate of 6 to 10% annually on inflation and have been for more than a decade. And people, that squares with what most people feel in their gut as far as their food costs, their housing costs, their medical costs, their insurance costs, higher education costs, things like that. So one of the things that you mentioned earlier that people are waking up from is this, I guess, ignorant trance that we've been in for a generation or two now, where, and my wife and I were just talking about this, where gold and silver, our grandparents understood this, or our great-grandparents understood those, since the beginning of our country or before. People understood those, but now we're in this thing where it's like, no, whatever it says on my 401k statement, or whatever it says on the evening news as the Dow Jones ticker going across the screen, whatever it says these numbers are that are printed, that's what's real, and anything else is something that's ancient or archaic or obsolete, no longer relevant. But can you talk to us for a minute about this 40-year expansion cycle that we're in? You mentioned it's getting long in the tooth, or a currency cycle that's even longer in the tooth. That people who are being told by traditional, I won't even call it traditional, modern financial advisors that are telling them, yeah, see, we've had many bulls and busts, we've had resets and corrections and that sort of thing, but still decade after decade, the stock market marches onward, and so just stay on that train, stay the course, you'll be well taken care of. What kind of risks do you think people are not realizing that they're really subject to if they don't hedge against that, and they just take the standard advice that we're being fed?
Yeah, well stated. I'm going to backtrack a little bit back to my youth. And, when that took place and the silver came out of circulation and then the gold, for American use, it was only international use, was monumental. And a lot of people that were older than me took it as a very substantive change in the monetary system, and there would be a price to pay. And I'd say there was certainly not a majority of the population, but a greater percentage of the population than there is now. Now it's starting to come back, I think, with this Wall Street silver and others, because there's nothing as powerful as an idea whose time has come. I've said that before. It's a famous quote. But back to your question, the idea that where we get chastised, myself and others in this genre, is, well, you guys or gals have been saying this for years, and you're wrong. You're just wrong. You're conspiracy theorists. You're wrong. Doesn't happen. Never happened. Well, first of all, we've had a couple of huge instances where silver and gold did skyrocket, so you made money in real terms. And secondly, you're wrong until you're right. And so what do you do knowing the future, but you don't know what point in time the fiat fails, or the monetary system is reset, or there's a new monetary system? Is you hedge. And I want to emphasize that word. So people like me that are hopefully level-headed about this whole scenario aren't like, gold, guns, and groceries, run for the hills, dig a cave and bunker down. My attitude is you have to know the future to the best of your ability, plan accordingly. And what that means is most people, it's about a 10% holding in precious metals and forget about it. So if you are one of these believers that the stocks only go up with the long term, and you want to buy, blue chip stocks or the famous tech stocks or the FANG stocks, be my guest. But I think you're making a mistake if you don't have a hedge, that there could be a currency crisis, a currency failure, a revaluation, or anything else. So if you had that idea, then, march on majestically. You don't have to be all in. It isn't like it's an all or nothing. It's a balance of your life. I mean, nature preaches balance. You eat the right amount, you stay slim your whole life. You eat too much, you get fat. You don't eat enough, you're too thin, you're going to be malnourished. I mean, everything in life pretty much points to balance. So it's the same thing in your financial life. You don't have to overdo any one thing. But if you don't have some exposure to precious metals, and something occurs that is outside of your control, and your certified financial planner never mentioned the word GOLD, it is a 4-letter word, then you may find yourself wishing you had. And I've often said in the pension plan regime and in the CFP regime, there could be, I'm not saying would be, could be a time when a lot of these well-established, I'll call them establishment firms, are in deep water because they never promoted, or I don't know if promote's the right word, they never taught the truth about a correct hedge position. So someone with, $5 million under management and he's balanced because he's got stocks and bonds or all paper assets, and the new NYSE goes down for a month because of a cyber attack, that individual might be very upset they didn't have a gold exposure, and they should. So, if you go back to CPM Group, I mean, a lot of people have an idea about Jeff Christian, and, they're welcome to it. It's little to do with the principles. And he did a study from 1968 on that proved portfolio theory that you need a 25% weighting in gold to balance a portfolio from 1968 on. Now, that's a higher recommendation than I give. And he did the study to do it, So, I mean, if you want to look at it from a Wall Street established research firm, they're actually advocating more or a higher percentage, I would say, than what I usually talk about in the public domain. So, it's there. But again, it's a four-letter word that very few people hear from the mainstream. And even when they do hear it from the mainstream, it's usually couched in a derogatory manner, let's say.
You mentioned earlier this Reddit Wall Street silver group that did a concerted grassroots effort to start buying physical silver at the retail level, and it seemed like it was making a difference. Matthew C. asks, honestly, how much pressure can be put onto the paper markets by removing physical silver from outlying dealers or large dealers? Where do you see this movement heading?
Well, I think it's a positive thing, first of all, for an individual basis. And of course, my bias toward wanting, equal rights for everybody. I mean, nothing's more important to me. This is just me talking about than financial equanimity, where, the financial system is not unfair. My motto, or excuse me, my mission statement, teach and empower people to understand the benefits of an honest financial system. I mean, that's what we should all be playing with. So, obviously I've got a big attachment to, but where will it go? I mean, you might look up one of the many, many videos I've done over the years called Myths in the Silver Market. And in that video, I talk about what the coin dealers will tell you, which they don't really know what they're talking about. And I'm trying to be friendly to all my friends like Andy Sheck and everybody else. And I say that somewhat tongue in cheek, but what you'll hear is everybody should own a little. And that means everybody should own a little gold and silver. In other words, anyone that's saving money should hedge. And if you're not in the stock market, you should save some money in gold and silver. You don't need a brokerage account to buy gold and silver. It's the easiest thing to purchase and the most liquid and the most recognized and the most universal throughout thousands of years. Anyway, off the soapbox. So there is that aspect. And if everyone in the U.S. bought 2 ounces of gold in a year, now it'd be about 2.5 ounces, you'd wipe out the entire annual mine supply on the globe. So think about it. If 5% of the world's population bought $100 or 100 fiat, 100 currency worth of silver, you'd wipe out the entire world's annual mining supply. So the answer is, you tell me. If you can wake up 10% of that many people and they put in $1,000, that's still 5% of the population we're talking about. What would that do? So let's go the reverse. Let's say you wake up the entire world and you only get 1% of them to realize the benefits of saving in real money. What would that do? So I think the sky's the limit if and only if we are able to educate enough people as to the true nature of what the banksters have done to us and why you need to do something about it and what you can do. So one, you've got to understand the problem. You're screwed. The banks always win or set up that way. 2, now educate yourself, but don't take my word for it. Get enough research in that you make up your own wise decision. And 3, take action and put $100 into the silver market. It's that simple. But will it happen? I don't know. It's an education thing. But this is why I'm so excited about the Wall Street Reddit. It's not so much silver. I mean, yeah, I will say, and I'm, biased, and it would help me, my, you know, investments, but that's not the purpose for me. It's more about what it'll do for them. It's what they will get out of it, not what I'm going to get out of it, what they're going to get out of it. One, they're going to be educated about the true nature of the banking system. Two, they're going to be protected. And three, they might have enough saved in some instances where they'll be able to move forward with, let's say, on a sounder ground financially and do more benefit for others or themselves at the same time. The paradox of a true capitalist, doing good for yourself and others at the same time. And that's what excites me. I remember some of my mentors getting older, and, I honored these men, and I still do. But, and then I was young and enthused, like I said, back in the, paper money album days. And, here I am getting into the winter part of my life. And there are many young people coming up behind me and all that. But the theme never changes. The idea is going from sound money to fiat failure, to sound money, to fiat failure, to sound money, to fiat failure, is a cycle that repeats over and over again. Now, does that guarantee we go back to, sound money again? Remains to be determined. I don't know. It looks like the push is to do anything but. That doesn't necessarily mean that is what will take place.
Another factor that may force our hand collectively is the world energy situation. We had Steve St. Angelo from the SRS Rocco report on near the end of 2020, and he talked about we're living on borrowed time. We've passed peak oil and so on, and that people not realizing the energy dependency of many of our other assumptions that we're making about how we're going to conduct ourselves and keep our economies going and everything. There's a specific question about that from Fabrice Necht, who says, David, could you talk a bit about another factor almost nobody talks about? Assuming there is coming an oil peak in the future, how would that oil peak influence the silver market? I'm thinking especially of the mining sector, which I guess consumes a lot of black energy, which can't be replaced with fast, clean energy. So can you talk to us, since you do work a lot in the mining sector, you review companies, you travel around the world looking at them. What do you think about the connection between our ability to expand or continue our consumption of oil versus our ability to extract silver and other metals?
Well, first, let me start off by saying I've got all the time for Steve. I mean, I consider him a good friend, and he certainly educated me more on the energy side than anybody else. And some of the people that he listens to, I also listen to, because he's helped educate me on kind of the who's who in that genre. And it's extremely important. In fact, I've gone on record as saying, everyone thinks money makes the world go round, and it's finance and stocks and all these companies. It's really energy, and that means oil for the most part. So, yeah, I have thought about it a great deal. And as the energy cliff is reached and we start determining that energy does run the world, we're going to start to behave differently, which means the most vital resources will be kind of on a triage basis. If you don't know what triage is, look it up. I'm not trying to talk over anybody's head. I don't have time. So it would be, in my view, what may sound extreme now, is you might give up all gold mining and only mine silver. What? What are you talking about? Gold's use value is very limited. It's a great store of value. It's a great preservation of wealth. I just said CPM said you need a 25% holding in your portfolio for a truly balanced portfolio. I'm not going to take any of those words back. What I'm suggesting what I'm doing is answering the question. If you only have X barrels of oil to mine, you are going to mine what you absolutely need the most. So would you do a lot of iron ore or steel? Probably not, because there's enough out there you could probably recycle it. You're still going to take energy. You'd have to do an equation. You'd have to do a little study, a trade-off study, and find out, is it cheaper to transport and melt down what we already have above ground than to get out the new stuff and make it fresh? My guess is recycling would be advantageous energy-wise. So everything will come down to the energy equation, energy return on energy invested. And so you're going to say, well, we could only mine so much tons of anything per year. And now what do? Well, we need cobalt more than we need iron ore. We need aluminum more than we need zinc. We need, and so silver would probably be pretty near the top of the list in a high-tech society. Let me go one step further that, I'm very well familiar with the e-waste, electronic recycling. There's so much waste in the electronic industry that gets thrown in the landfills. It doesn't have to be. And one of my favorite speculations in the Morgan report is one that we've been on for a long time. And like any of these micro-cap stocks, it's gone way up and way down and disappointed a lot of people, and on it goes. But the story's still there. It keeps getting better as far as moving in the right direction. And I do own it, but I will probably be putting it out to everybody on the free list here within the next month or two. I'll just throw it out there, use the disclaimer, I own it already. And here's their videos, because they've got a couple of 4 or 5 minute videos that are really exciting. I know we've talked about it on your show, Dunnigan. I prefer you not give the name out right now. I kind of like to get people my free list and just, give them the whole Megillah, because I'm going to show them like 3 or 4 films. And I'm going to take out reports that I wrote for our paid people only and put them out for free. So it's something, and it's a speculation, folks. This is something you bet a little to win a lot. But it is a game changer, I think, in the long run. So I know I was long-winded on that, but it needed a long-winded answer because it's a great question. And very few people think in those terms. Steve is one of the few that I know that really has a handle on what's really happening in our future. I mean, you can look at a piece of gold or silver as kind of an energy receipt. It took a lot of energy to get that coin into your hands, not just talking about the mining, the refining, the smelting, the, transportation. I mean, there's a lot involved, and it actually does represent a lot of things. And then again, to repeat, when you got one gold coin in one hand and one silver coin in the other, and there's a ratio of about 65 to 1, it takes 65 pieces of silver of the same mass to equal the value today of one gold coin. But when you figure out without that silver, you couldn't have this conversation. You couldn't have a computer, cell phone, laptop, touchscreen, or anything else. Gold can substitute for silver in some instances. I won't say it can, but not as well.
Yeah. We have another question. This is a different question related to the gold that you've mentioned, that you said that the CPM report suggested 25% people's holding in their investment portfolio. Interestingly enough, the major international banks that met in Basel III in Switzerland, 18 months after having purchased more gold in the previous year and a half than they had in the previous 60 years, declaring gold a tier 1 asset, saying that banks that have it on their balance sheet could now count it at 100% value rather than 50% value that they had previously. So evidently they see also value in having it on their balance sheets as well, not just ordinary householders. But this question from James Kukona says, will the NSFR, the net stable fund ratio, as outlined in the Basel Committee on Financial Regulation, affect the gold price starting at the end of June? So that's when the off-balance sheet unallocated gold will now need to be backed by some assets equaling 85% of its value in fiat, and so on. So there's this provision of the Basel III agreement that's going to kick into effect at the end of June here, and people are wondering, do you foresee that net stable fund ratio provision of Basel III affecting the price of gold this mid-year, or do you think it won't have an effect?
I don't think it'll have an effect immediately. I mean, the problem with gold is it's not understood well enough. And the people that do understand it already are kind of own what they need or want. So you have to look at it in the perspective of what power gold has. And gold is less than 1% of the total financial system. So for gold to have a lot of clout, it's got to have, more in the 3, 4, 5, maybe 10% range. Now that can happen in one of two ways. You could have 3, 4, you could have 10 times as many people wake up to the gold story and want it. You could have a currency crisis where people automatically kind of gravitate to it, or a combination of all these things. Or you could have a price that moves the gold where it becomes, instead of 1%, all of a sudden it's 4% because it's gone up from 2,000 to 10,000. So there's a lot of things that can happen, but the answer, may not be what you want. What's going to happen when it flips over later this year? I think very little. I'm actually fairly bearish on gold right now. I hate to say it, but I'm not a perma bull. I mean, I've called every top in silver that's happened so far. So people get mad at me, but they don't really, people that know my work don't know my work. And I do a lot for the public. But regardless of how good or bad I am, I have called the tops. Will I get the next one? I don't know. But I don't like the way gold is acting right now. I'm afraid we're going to be in a trading range for several more months, meaning 4, 5, 6. I mean, I could see gold still under the 1850 level in another 6 months. I hope I'm wrong. Anything can change it. I have to use a little caveat, one of those black swans hitting another one, all of a sudden goes to $2,000 over a matter of a few weeks. That can't always happen in these markets, but I don't see it right now.
We've also talked with people, it's interesting, human psychology, and you've often talked about the philosophy of taking responsibility, standing up and defending your sovereignty, your natural born rights, God-given rights, that sort of thing. Human psychology is an amazing thing, and this idea that people waiting until they see the herd moving into something and then you see the price action momentum and then they go, well, maybe that is a good idea after all, and by that time they can't get any, or it's at an obscenely high price compared to what it would have been if they'd have done it when it was looking boring. And like you're saying, if we're in for a summer doldrums of gold, that's exactly what I was talking with people as a broker in September, October, November, when it seemed rather boring, and compared to March when everybody was scrambling hand over fist to get whatever they could, or now we're back into since the Reddit squeeze, people trying to, cleaning out online dealers. So, but anyway, it's at those times when there's some availability and you can get your hands on something if you don't have any. It's so remarkable to me that the human psychology is always, it's available. Oh, then it'll be there when I need it. Never mind. I'm going to go back into the casino and get back on ride this Dow Jones Industrial Average a little bit farther, as long as this bubble is expanding. Can you talk to us just for a moment about that, where our human psychology helps us and where it hurts us?
I'm laughing because I'm going to date myself again. But for those that are much younger than me, there's a movie called Caddyshack, and in that movie, Rodney Dangerfield was a rich guy with a golf habit, and I think that was actually before cell phones. You could correct me if I'm wrong, but he had a cell phone, and he gets on and goes, "Everybody's buying, sell. Everybody's selling, buy." And of course, that's really kind of the key. So you want to buy, straw hats in the winter. It's one of the famous stock expressions. You want to buy it when nobody wants it. So I want to go a step further, because when you're asking the question, one thing really popped in my mind, and that was in 2020. We saw, that $12 print, but we saw silver around the $18 level. And there's a buyer of last resort for almost everything. I mean, every new car that's not purchased by somebody is in a dealer car lot somewhere. Someone has purchased that and it's sitting on a lot somewhere. Silver is similar, that the industry, let's call it the bullion banks, let's be specific, they're not naming any, are the buyer of last resort. So that $18 silver that nobody wanted, they bought it and stacked it on the shelf and stacked more on the shelf and stacked more on the shelf and stacked more on the shelf. And that's why you saw this pretty big inventory build in not only the COMEX, but particularly in the LBMA. And that's because, again, they were the buyer of last resort. And then, one guy, this Scott Maynard, I hope I'm saying his last name correctly, was at Davos, now well known as the World Economic Forum, in mid-January, so 2020, was asked by Bloomberg, what's your go-to investment? And he said silver. And the reporters were like, what? And he went on to say silver was undervalued relative to gold. And so we saw what silver did in 2020. It was the best performing metal throughout the sector, precious or non-precious, and made a nice run. And the ETFs had an all-time inflow into them on physical silver. And I'm not going to get into the details of the ETFs. It's too long a story, and you can look it up on the internet or not. I just wrote about it in the last month's edition of the Morgan Report. But regardless, whether you want to take the time to do that or not, purportedly, over 300 million ounces of physical silver was moved into the ETFs last year. This is monumental. We've never seen that kind of amount of silver going into the commercial bar, the real silver market, going into investment form in that amount. So that's 2020. What if it happens again in 2021? Certainly could. Will it? I don't know. What we did see, and you asked me at the very beginning of the interview, you'll talk about it, so I will. I mean, during the start of the Reddit squeeze, I'll put in quotation marks, 110 million ounces were into the SLV in about a 4-day trading period. Now, about half of that came out within a couple of weeks later. But nonetheless, I don't know of any commodity, corn, cotton, cocoa, the softs, the financials, the metals, anything that would have that kind of a flow that wouldn't go up limit. But silver got like an overnight squeeze because all the, Andy Sheckmans of the world, all the retail market had to hedge and had no product left. And so they hedge anyway. And, so there was this big gap in the chart that was normal. I mean, that's what would normally happen in a market that's under that much supply squeeze. And it subsided rather rapidly, as we all know. So as I said in a previous interview, and someone captured I love these lines that are clickbait, they call them, but, I said something's wrong in the silver market, and I think there is. But I can't prove it. All I can do is give anecdotal evidence, but compare it to a guy that traded futures for a long time and knowing what oats would do or what, beans would do or soybean oil or any of those commodities. With that kind of buying pressure in that short a period of time, you wouldn't see the same reaction that you saw in the silver market. Oh, and I want to say one thing about hedging too. This has been on my mind. I haven't done an interview, get an exclusive here done again, but I don't have anything against hedging, really. But let me explain. So when Andy Sheckman gets a big order, we'll just make up a number, 500,000 ounces of silver on the collective. That's what he's done for, let's say, the day or the week. Let's just say for the day. Well, he goes into the market and he sells as much as he has sold. So if the price movement takes effect, he's hedged. What does that mean? And I want to explain it. So let's say it's at $28. I want to do it at a round number. I can do it in my head. So he has hedged at 28. So if the price of silver goes up and he sold at 28, for every dollar that it goes up, he is making money on the physical silver and losing money on the hedge. So he's exactly at zero. It's as if he doesn't own it. That's a hedge. Dealers need to do that. Why? Because some people don't fulfill their promise. They don't buy what they said they were going to buy. They buy it at 28. The market drops to 26.50 a week later, and then they forget to send their check in or whatever. So dealers have to hedge, really, or at least it's a good practice if you don't. Because the dealer is in the margin business. They are in the silver business. I don't want to misrepresent anything. I'm trying to take a fair approach here, but teach the principle that hedging is when you have protected both sides. Now, once the person's check comes in, the hedge is lifted, the dealer's made his margin or her margin, the company's made its margin, the silver goes out the door, packaged up, off to the client, and everybody's happy. But the client, really the company has been protected, and they need to be. That's a hedge. But let's say silver is at 28 and you sold it 10 times more than the client has purchased. That's not a hedge. That is not a hedge. So when the Reddit group got enthused about the silver story and started buying physical, and I hope they continue, we saw some of the ETFs change their prospectuses. Well, if they were truly neutral, as they should be, there wouldn't be any problem. I mean, they're basically a stock. You're buying a stock. Even when you buy the PSLV, you are owning a stock. So if you've got a stock in a mining company or a stock in a shoe company or a dress company or a tech company or a restaurant, I don't care. You own a stock, and that's what you own when you own an ETF. That's what you get. You get a piece of paper. It's a stock certificate. Anyway, I'm sorry I'm digressing a bit, but the idea being, if they have to change their prospectus and start calling out the people that are buying their company, what is going on? That would be like me having a company and being, president or whatever level, and complaining that people want to contribute to the well-being of my company. Doesn't make any sense, does it? What do you think about this craziness?
Yeah, well, that's one of the confusions that a lot of people I speak with have is they say, why would I need to buy precious metals if I already own shares in SLV or shares in GLD? And we have to start unwinding that. I know Andy Schechtman has talked about actually reading the prospectus in detail and seeing that there's levels of indirection and there's levels of ownership between different companies that don't have an accountability chain. So you're up here you're the investor at the tippy top, the retail investor, and you're holding shares of a fund that's supposedly invested in somewhere down there's some physical metal, but you're never going to get your hands on that physical metal. You have no way of finding out that if the number of shares that are sold match the number of ounces of physical metal. There's no accountability and transparency, and there's all kinds of clauses in there about force majeure and act of God and all kinds of things. And that's the other thing when you talked about way earlier in this interview, you talked about what happens near the demise of currencies or major events, or taking advice from a retail investment advisor. And as we saw in the past year with the COVID lockdowns and everything, it's like, oh, that ate my homework, all rules are off because there's this big force that happened, and therefore commitments that we made are not in force anymore. So it's really, my gravest concern is that people think they're not at risk, they think they've hedged, and they really haven't.
Yeah, well said. I agree.
Well, David, if people want to follow your work and find out more about what you do, where should they get plugged in?
Yeah, just go to the main website, themorganreport.com. Just get on our free newsletter service. As I promised, I will be putting out an update for everybody's benefit on this e-waste speculation that I've been involved with. I've done this in the past. I've done it a few times. I just haven't done it in a long time. And I think it's one of the better, as I say, speculations I've seen in many, many years. But just because I like it doesn't mean it's going to go up. But it's in a good spot right now. They're fairly well funded, and I have gotten some contracts. The patents have been approved. A lot of these companies I've dealt with on the microcap level are always patent pending, and they're always pending. They never get approved. They have 3 patents that were approved. So there's a lot of good, but it's a very high risk situation, but high risk, high reward usually go hand in hand. So I'll leave it at that. I'm not trying to oversell it. But just to get on the interview list, and I do a weekly update for free for the public every week to try to just kind of dial in on the biggest financial news that's crossed my desk that I think is important, and I try to wrap up with a comment or two about the precious metals market. So thank you for having me. I appreciate
You bet.
it.
And folks, if you don't want to lose track of any of David's interviews, any of the links that he provides, and all of our guests, make sure you go to libertyandfinance.com. Sign up for our free newsletter over on the left-hand margin. Put in your name, email address will get you on our free newsletter, and you'll find out about all of our interviews with all of our guests, no matter what happens on YouTube, because we're also on Brighteon and Rumble. We'll see you there, but make sure you sign up for our free newsletter, libertyandfinance.com. David Morgan, the silver guru and founder of themorganreport.com. Thanks for joining us again here on Liberty and Finance.
Thank you, Duncan. Appreciate it.
If you've decided that now is the right time for you to protect your family's financial future by acquiring physical precious metals, gold and silver, I'm delighted to let you know that I have now become a licensed dealer's representative for Miles Franklin, one of the oldest and most trusted names in bullion dealerships. And we can provide you with physical delivery to your personal possession or to professional vault storage or precious metals IRAs. Just email me at libertyandfinance@protonmail.com, and please include your name and phone number in your email to libertyandfinance@protonmail.com. We'll get right back with you and find out how to best meet your needs so that you can either begin or increase your acquisition of physical precious metals now and protect your family's future starting today. To acquire gold and silver, just go to libertyandfinance.com. When the main site comes up, click on Bullion Sales. That's libertyandfinance.com. Bullion Sales. You'll see my name, Dunnigan Kaiser, my phone number, and my associate Kaiser Johnson, his phone number, our email, libertyandfinance@protonmail.com.